There are 4 great estate hacks. You want them? I'm Paul Morrow from Smart Financial. Let's talk about estates. Small, medium, large, extra large. Let's just start at the bottom at the really small estate planning. I want to tell you that there's a company out there called Thrivent. Thrivent is an insurance company, an investment firm. They're a wonderful firm. They actually have a program called Money Canvas. Money Canvas. If you're a small investor and a small estate planner and a do-it-yourselfer, you can get help from Money Canvas for free. I don't mean a little bit free and then you pay a little bit or any of that sort of thing. I am talking about a company that actually does financial and estate planning for people of modest means who need the work. This is the mission. The Thrivent Company is a very mission-driven company. I've had contact with them over the last 25 or 30 years, and I will tell you, they live up to every single thing that they talk about. If you want information about the Thrivent Company and their money program, this is called Money Canvas. It's free financial coaching program for people of modest means. So the number one thing is if you have a very small estate and you're a do-it-yourself person, Money Canvas is a helper program for you. Number 2, let's go to somebody a little larger than a startup. If you've got a modest estate, you're at your first $1 million, I think that you can still do it yourself with a little bit of help of minor legal work. Now, I actually think that if you have a small estate, you really shouldn't be paying a lot in financial advisor and advisor fees and charges. If you're at that $1 million mark, you might spend a few $100s on basic estate planning, wills and stuff. If you can't get them through your company-sponsored program, just one thing, please don't do them online. I do think that downloading and doing your own legal work online is a little dangerous. I do think it's worth a small investment to make sure you have the basic legal documents done. Now let's move up the ladder a little bit. Let's say you have a substantial estate, 2 million or more, you're doing longevity planning. Now you're in the game for doing the great estate cheats. If you have a $4 million estate, especially in certain states, you're subject to a lot of things, including death tax and inheritance tax. So how do you get out of that? Well, you go to a comprehensive planning firm that do risk, investment, tax, cash flow, estate planning, Medicare planning, forward mortgages, reverse mortgages, all these different things. If you go to a comprehensive firm, they're going to suggest to you, you do a full suite of legal documents. And I'm talking about a mom trust, a dad trust, a housing trust, etc., wills, powers, proxies. Are you going to spend thousands? No. I think a comprehensive package like that for a family that's got $4 million is probably not going to exceed $2,500 in most states. It's pretty reasonable to spend $2,500 to save $200,000 or $300,000. If you are not a do-it-yourselfer and you're not looking at your stocks and bonds every day, and you are paying for a financial advisor to give you some of the investment help, make sure that you're only paying for investment advisor help on things that are like equities that need a lot of daily management. Don't pay investment advisor help on something like your fixed income accounts that you set it and forget it and you have guarantees. And basically, why would you pay a 1% management fee on a 10-year treasury? It doesn't make any sense. Do on the third level, comprehensive estate work to save a ton of money. The rate of return on what you spend at $4 million is spectacular. Now let's go to the high end. If you have a supersized estate, let's say it's $50 million. Imagine for a second, if you had a $50 million estate and you've got substantial death taxes and income taxes and all kinds of things. One of the greatest estate hacks is the family limited partnership hack, where you can retain 1% of your family partnership, the general partner control of that family partnership, and you can export the other $49 million to children and grandchildren. By retaining control at the end of your life, how much is in your estate? Well, what's 1% of 50 million? 500,000. It means that your death estate is minor and the vast amount of your wealth is exported to your family members over time. This is super important if your family owns real estate and business ventures and other stuff. So don't fall asleep. If you have a substantial estate that you're building, don't save up to pay more taxes. Use the estate hacks that are out there for you to reduce your estate costs, your income tax cost of death, your fees and charges by using the tools that are available today to help you pay almost nothing in federal estate. So go ahead and mash the button there, subscribe, stay in touch with us. If you want to download information on how family limited partnerships work, you can reach out to us and we have that on our website. I'll see you again next time on Smart Financial.